ladies and gentlemen, it gives me great pleasure to welcome the one and only Dr. Dambisa Moyo. Dambisa, thank you so much.
Thank you, Mo. Very kind. Thank you. I'm happy to be here.
Delighted to have you. So now I know we have lots to discuss about what's happening in the world, but maybe just before we get there, could you take a minute to give us an overview of a little bit about your personal stories, maybe your formative experiences, and how did those experiences endow you with the worldview that you carry?
Well, thank you. I'm delighted to be here. As I mentioned, I was born and raised in Zambia, Southern Africa, one of the poorest countries in the world still today. Landlocked country. At the time of my birth in 1969, the population was roughly 10 million people. It's a big copper exporter. And obviously in recent years, it's become quite attractive for investment from places like China. I was born very fortuitously into a home of two educated people, my mother, a banker, and my father, a PhD holder from the United States. And so in that sense, myself and my siblings were very lucky because education was emphasized. I started my career in Africa, formative years in Africa. And only in much later, actually, 1999, when we had an attempted coup in Zambia, overthrow of the government, did I move to the United States to complete my undergraduate degree and to follow up with my advanced studies. Ended up going to Harvard. While at Harvard, I was getting a master's in public policy, met a wonderful professor, Sir Paul Collier, who lured me to Oxford. I followed him there and ended up doing my PhD in economics at Oxford and was hired into Goldman Sachs, where I was for about 10 years. Mainly in London. And subsequently, again, from a lot of twists and turns, life being life, I ended up publishing my first book, Dead Aid, in 2009. And subsequently, as you mentioned, Mo, I've published 5 books, very interested, always interested in human progress and development. So how should we be thinking about future investments and the global trends that create headwinds for economic progress around the world? Subsequently, certainly the last 12 years have served on the boards of a number of large global and complex organizations, from the ones that you mentioned, 3M and Chevron, but also Barclays Bank, Barrick Gold, which is headquartered in Canada, and really very fortuitously have had the opportunity to provide that perspective for organizations in very different sectors. So consumer goods, energy, mining, banking, and media. And so, maybe that stops there just as a starting point.
Yeah, well, so I want to go back. I want to come to I'm sure we're going to weave into a lot of topics, but at a high level, you mentioned you sort of, one of your interests has been anticipating major trends. And I recall, like, back in 2018, you made some fairly remarkable predictions. And at that time, you said that we were entering a period of low growth, deglobalization, resource constraints, and the undermining of democracy. All of those played out. So can you talk a little bit? Unfortunately, yes. Unfortunately, they played out. Notwithstanding they all played out, I'd love to hear how you might update those predictions today, and then maybe even talk a little bit about how you're seeing the world going forward from there.
Yeah, so, look, I'm not Nostradamus, and I'm not claiming to have a crystal ball as to what happens next. But I will say in the last 2 years, while we've been locked down because of the pandemic, I've spent a lot of time going back in history, trying to figure out or trying to identify patterns of whether or not we've been in this sort of economic malaise where we have geopolitical uncertainties, concerns about not just the economy, but social fractures, and of course, the threat to democracy. And really the most similar period, as I read, and I'm sure many historians would potentially object, is the Gilded Age, the period between 1870 and 1900 in the United States. It's a period very similar to the period of 1950 to 2008. So a period of high growth, a period of a lot of globalization in trade, in the movement of people, in terms of migration, in terms of capital flows, in terms of multilateralism. And I was very interested in this period also because we have large global corporations, Back then you had Standard Oil, you had the robber barons, the railway barons. Obviously, we've been living through a tremendous period of global corporations. But also both of these periods are characterized by relatively small government in terms of just size, but also power and influence, more of a laissez-faire period. So I was very interested in what happened to the Golden Age. And basically, it was punctured by three things. They had a world war from 1914 to 1918, what was World War I. Then they had the Spanish flu, the pandemic, 1918 to 1920. Then, of course, their own economic crash, which came with the collapse of 1929 stock market. And so then the question becomes, well, what happened next? And after that economic crash, 1929, you end up with a period of 25 years of not just economic malaise, high unemployment, low growth, but an unwind of all the things that I mentioned earlier. You have more deglobalization, antitrust kicks in, so you have the breakup of corporations, the government gets bigger with much more sort of leaning into policies that support a welfare state. And so to me, we're sitting where we are today, that's where we're headed. I'm afraid we are headed for a lower growth forecast. The IMF and World Bank are meeting next year, so it will be interesting to see how they update their forecasts. But just in this first few months, Britain has a print of 0.1%. Just as a rule of thumb, you need to be growing by 3% per year in order to double per capita incomes in a generation. Most emerging market economies and developed economies are growing far below that. There's now real risk of recession. You would have seen updates and upgrades from organizations like Goldman Sachs saying, close to 40% chance we end up in a recession this year. You've seen the inflation print numbers, again, in the US, in the UK and elsewhere, unprecedented. And then, of course, geopolitically, there are lots of fissures, not just because of Russia and Ukraine, but even before the pandemic hit in earnest, we were already seeing an undermining of trade, big issues around immigration, rise of China and the development of competing institutions, the ones that would compete with the Bretton Woods multilateralism. And so, I'm afraid, at a very macro level, I'm not very sanguine about what the next couple of decades holds. We have a lot of headwinds, inequality, climate, enormous amounts of debt, so on and so forth. And at the same time, I think that, and maybe on a micro level, I think there will be opportunities for investment, and I think we'll probably get to that. But, really looking back on history, I think we're at the precipice of a pretty uncertain and likely, wholly dissatisfying world where growth is concerned.
Wow, okay, that's a depressing way to kick off. Yeah, well, yeah, but let me actually, I'd love to double click on a whole bunch of those, but let's talk a little bit about growth. And you mentioned, you need 3% in order for sort of aggregate wages to double over the next decade. Why is that important? Why is growth paramount? And is that really just keeping up with inflation? Like what is the kind of fundamental critical aspects of growth that every economy needs to have in order to sort of maintain some of those issues or address some of the issues you referenced?
Yeah, so, I think fundamentally, when I say growth, I'm talking about expanding the pie, really moving people's living standards. So, why does growth matter? It matters on an economic basis because it actually improves people's living standards. People can afford more, they can get access to education, to healthcare, you get better infrastructure, so on and so forth. More people get more access. And obviously with that comes social mobility. But also it matters a lot for innovation. It's not an accident that countries that have had higher growth over time are the ones that are leaders in innovation, in the opportunity for R&D to try and solve some of the biggest challenges and seemingly intractable challenges that the world faces today, climate being one of them. And then the third thing, which I've written about extensively, is that you need growth because you do need a middle class in order to hold a democracy together, the ability to hold government to standard. And there's lots of wonderful research that I've written about, but that's out there that shows that countries that are poorer find it harder to hold government accountable. You have, even in Western developed economies, people who are at lower incomes, we see lower participation rates in the democratic process. So we need growth if you want to get to that. What we used to say back in the day, one man, one vote. If you want to get to that place, you really do want to have more growth, more people in the middle class. So those are three reasons that fundamentally growth matters. Now, I'm not saying growth at all costs. Of course, we've learned a lot. We want to make sure that there's no, sort of corruption and capture of the state. We want to make sure that we're doing this in a sustainable way. We want to do this in an inclusive way. And so those are all considerations that we have to be very mindful of.
And just one thing you said, just touching on, you mentioned that democracy is kind of more sustainable and durable, perhaps in a growth-oriented regime. When we look, and you've written a little bit about this, and I just don't remember where, about the fact that if we look over the last number of years, it hasn't been liberal democracies leading the economic engine. And you've had China and Chile and Singapore and whoever it may be. Could you talk a little bit? Is liberal democracy really the best platform for economic growth, or is just the way that we're exhibiting liberal democracy? Could you elaborate on that?
Yeah, sure. So, a very good friend of mine always says the numbers don't lie. And the numbers have shown that over time, think about the Industrial Revolution, and even to more recently, since the United States really took on the baton as being the leader of the sort of free world. These are the places where we've had the most innovation. We've had the biggest leaps in economic progress. It is true that countries that are illiberal or even authoritarian have shown economic progress. But those countries are not purely detached from the global capitalist system. We know China, for example, has been one of the leaders of economic progress, but it is also fair to say that China was the largest economy in terms of GDP in the 1700s, according to Angus Madison. They made a number of mistakes, policy mistakes, and it cost them 300 years. So the evidence right now is if you want innovation, if you want to be a tip of the spear in trying to solve for some of these big challenges, that you do have data evidence that shows that economics is very correlated. Economic progress is very correlated to a liberal, free environment. Now, the other point worth making is that this is not a static thing. China, as you just pointed out, has been doing extremely well. There are a lot of people who would argue, well, it's too early to see. That we've seen flash in the pan countries do really well for a short period of time. And then they sort of, the wheels come off and they have some challenges. So I think it's too early at this stage to rule out or rule in one versus the other, but certainly there's a lot of evidence that shows that democracies tend to perform better in terms of the markets and economic progress.
And in terms of the today, the democracy that we have, and one of the things that you pointed out is that liberal democracies work very well when you align the time horizons, the investment cycles, with the political cycles. And when they're misaligned, all of a sudden you have a lot more short-termism. How do we remedy that? Like, how do we deal with that with election cycles that are much shorter than our sort of investment or economic cycles?
Yeah, so the issues around the efficacy of democracy is an area that I spend a lot of time talking about in my book, Edge of Chaos, that you showed earlier. Because clearly, if you just put China and authoritarianism to one side, we still have a lot of problems in liberal democracies. The EIU, just the Economist Intelligence Unit, just last month put out a report saying that actually there are fewer and fewer liberal democracies and they're much more volatile. Think about Brexit, think about the nationalization under Trump. They also are showing that these countries have higher poverty rates. I mean, we might like to see a lot more inequality. The financial crisis came from the West. And so clearly there's some issues that need to be addressed. So, but to your specific question about short-termism, this is not just a government problem. It's a problem that we see even in the private sector. And there are, I believe, in fact, in the book, I offer 10 remedies for the weaknesses in democracy, in particular, looking at this gap between long-term problems and short-termism. I won't go through all of them, but just to give you some examples of what in the policy space you could think about doing. is extending terms instead of having elections as they do in the US every 2 years, every 4 years for president, but every 2 years for Senate and Congress. You just give the person one term in office, and it's a longer term, which is more matched with public policy and economic cycles. So maybe you get a 6-year term or an 8-year term, but you're not allowed to run again. Other things that, and by the way, all the proposals that I have in the book are things that are actually in place in the world. So this is not me just cooking them up in my kitchen. They're actually, there's evidence of these things working, and they sometimes don't always work, but I talk about that as well. And then of course you can also link economic payouts, remuneration to our policymakers to longer term outcomes. And so obviously this is something we do in the private sector. The corporate boards that I serve on are now linking performance to not just, hey, how did you perform this year? But hey, in 5 years' time, if we find out that you were cooking the books or you were doing stuff that undermines the company, we can claw back malice and claw back on compensation. They do that in places like Singapore. I don't see why that isn't something that we wouldn't be attracted to in Western democracies. Again, that would force a longer term perspective in some of these issues.
Okay, no, thank you. And so one of the things that, again, when we talk about the major trends of back in 2018, you touched on resource constraints. Obviously, the more recent war between Russia and Ukraine, I mean, even before the war, due to COVID supply chain, we had resource constraints. But now with the war and some of the commodity supply challenges, how has that impacted the global political, social, economic agendas? And how has that shaped your views? I mean, obviously, it's made it more extreme, but the outcome. But how are we viewing it today, based on if we were reflecting in 2026 or 2020? What would we be saying about this period?
Yeah, so look, I think at a very high level, there are 3 consequences of the oil price, for example, being at over $100. Clearly, there are economic challenges. So that's just, you've got higher inflation, it's more costly for people to live. That's a real hit to how people live. And there are real warnings coming from policymakers now in the UK. The governor of the Bank of England, Andrew Bailey, has talked about how the cost of living adjustments and concerns will be much worse than they were in the 70s. So there's a real economic impact. And we can talk about that. But there's also, I would argue, a real challenge around security. Energy security is now back on the table. I mean, there was a moment there when the United States in particular was energy independent. Now we've got all these vulnerabilities, the war with Russia and Ukraine, but more generally, the very fact that the world's population is continuing to grow, and there's a lot of pressure on natural resources, which are supply constrained, they're finite and they're depleting, means that we are in this world. Just as a quick measure, we are consuming 100 million barrels of oil every day, 100 million. And even if you have the net zero targets met, and a lot of the climate agenda, which is very important, does gain a lot of traction, we're still, according to the IEA, the International Energy Agency, we still could have 50 to 80% of energy dependency in 2050 based on conventional sources of energy. So this is something going away. And then the third point, which I've just hinted at, is how do we think about the energy transition when there's an oil price at $110? People, were very enthusiastic when oil was very lowly priced, understandably so, and a lot of good work, including in organizations that I'm involved with, endowments and corporations that have really been leaning in to renewables, solar, wind, geothermal, biomass, biofuels, battery, nuclear gen forming. There's a whole list, hydrogen, of things that we're looking at to create a replacement for, or at least to support the conventional energy sources. But we're not there yet. There are 8 billion people on the planet. There are still over 1 billion people with no access to energy on a cost-effective, sustainable way. They're living in darkness. My parents included in Africa, and they have a lot of problems with load shedding, so access to energy, and that has meaningful implications for people's lives. So, I think it's not just about economics, it's not just about energy security, it's also about the fate of our climate efforts in a world where people need to survive today. When it's cold outside, it's 30 degrees and people need to warm themselves. There's a real debate about how to think about making sure that we continue to focus on renewables with the urgent understanding of climate change, but at the same time, continue to make sure that people aren't dying.
Right. Well, just as I want to move the conversation a little bit more into the practical domain. So if I could, so first and foremost, when you're thinking about these trends, and again, you've proven to have a unique ability in anticipating and reading the tea leaves of markets. A, how the hell do you do that? But B, how do you take those macro themes and then translate them into practice?
Yeah. So I'd say two things. One is with respect to how do I think about the future? I travel a lot. I've been to about 80 countries, democratic, non-democratic, rich, poor. I speak to business people, academicians, a whole range of people, because I'm very interested in what's going on in the world. I think this is really important because you don't want to be in a world where you're just taking other people's views. You got to go out, kick the tires, really understand what's going on, especially on the bigger trends. I did mention also going back in history. One of the things that I found, and perhaps of relevance and maybe obvious to your audience, is that when in reading about family offices, which are like endowments in terms of their very long intergenerational planning, I found out that for family offices, very long-term thinkers in terms of investment horizons, they've tended to invest in only 3 asset classes: a third in art, a third in property, and a third in equities. They don't invest in bonds. And we can have a debate about returns over time. There's a wonderful database of information from the NBER, the National Bureau of Economic Research. They have a database that goes in from 1870 to 2015 of returns, and it shows that actually the best returning assets are equities and property. They return about 7%. Bonds are a no-go area. So that seems to comport with how family offices have thought about this. So going back in history and just saying what has shown itself to be true, I think is a great input of how I think. And then I suppose maybe just to put a finer point in it, what do I think is going to be dominating the next several decades? I think 3 areas. I think China's not going away, and that's really important because a lot of institutional investors, certainly in the US, do not have a lot of exposure there. It's only 2% exposure to China. I don't think, I think technology, we've just begun to see what technology is going to do. And by technology, I'm not just talking about consumerism and networks. I'm talking about how it's going to append public goods like education and healthcare. I think there's a lot of a runway there. And then the third thing is we talked about is the energy transition, huge opportunity for people who understand it to be a science problem and can crack these issues. And I think there'll be a lot of investors, breakthrough industries like energies like Bill Gates are already tip of the spear on these areas. And I think people who think about climate as being not just a glass half empty risk mitigation thing, but think about it being an opportunity for investment, I think will do phenomenally well.
By the way, I was just reflecting on your comment about the 3 sort of overarching asset classes. So equities, I assume public and private, and then property, and then art. Art, that's an interesting one. Any additional comments as to why? And and how to think about the fundamentals of that?
So I think it's simply supply demand, to be quite sort of short shrift about it. And when I've talked about this idea in an endowment, they're like, yeah, but if you're running $100 billion endowment, I mean, how much art can you really buy? It's an incredibly illiquid market. So perhaps it's not surprising that's more of a family office thing, and that the family offices, if you think about the sweep of history and war, et cetera, it seems it's an easy thing to be able to transport, relatively easy, I should say. So it's not liquid, and it's probably not that big a market. If you think about the amount of capital you'd want to deploy if you're a huge endowment or an institutional investor. But nevertheless, in terms of thinking of returns, and there's a lot of interesting data about returns over the last several decades, I think it's something that you can't sort of rule out. And with NFTs now, I mean, how that pans out, I think will be very interesting.
Yeah. And one of the things you mentioned was you talked about earlier on, you talked about the cycles and this period between, 29 and 54, so to speak, which was like this basically lost era where there was no returns. So, and you kind of, if I understood correctly, analogize the period before to the period we're experiencing now. So, you marry that up with the 7% returns from equities you've experienced. Are we like, is there any realistic, probabilistic chance of us getting 7% return on equities over the next?
I just look at what's being forecast. McKinsey's done a lot of work on this, and they think it's going to be more likely 4 to 6% in their reporting. That, to be honest, it was before the inflation spikes that we've seen, so they may have even altered their forecast downwards. The growth projections, if you look at the IMF and World Bank tracker, which is public, they've adjusted 2023, 2024, and further out years in terms of where they see growth. They think that's going to be quite weak. And so, if you're a betting man or woman, do I think you're going to get 7% returns? I think it's going to be tough. Right. I think it's going to be very hard. Now, that's not to say that there won't be any places. I mean, private equity's done well. Maybe it's a little bit, toppy now. If you start to see, Instacart, they revalued down 40%. And so there's a big question, obviously, not just public markets, but private markets re-rating the sort of valuations. And so, am I optimistic that we're going to get those 7%? No, I'm not, but I'm a long-term investor. So for me, I think even if we get a 25-year malaise, which hopefully we don't, but if we were to, I still hope, and hopefully I'll be on the planet still, that there will be a period of reinvestment and recalibration.
Right. Okay. Fantastic. So just on this topic, and you spent a lot of time working with some of the largest families in the world, like the Rothschilds and the Rockefellers, and now you're a co-principal at a single family office, Versaca. Like, what lessons have you taken, or common themes, or even common mistakes have you taken from those largest, sort of globally recognized families to Versaca and the way that you run either the family office or frankly, even the investment committee at Oxford University that you're on?
Wow, we only have an hour. I think fundamentally people matter, processes matter. I think those two things, it's very easy to be lured and tempted into things in the here and now, but really setting up a framework of values and sticking with it. So having rigid processes, I think it's high value. And by the way, I think this is true for corporations that have been around a long time. I'm on two boards. The companies have been around for 140 years. I was on the board of Barclays Bank. Barclays has been around for 360 years. If you think about the sweep of history in that period, from Industrial Revolution to China being the biggest economy, to it not, to democratic principles, pandemics and economic crashes, how do you navigate these things? I think it really is organizations that are built in terms of systems. The other thing is that, if you look back again at history, and there's a lot of wonderful research on this, that there's something quite attractive about concentration. And there's a lot of numbers out there that show that, in the United States, certainly since the 1920s, 1930s, only 4% of the stocks actually explain the bulk of, over 80% of the returns. I mean, I'm sure you've seen lots of these type of studies. So I think there's always a temptation, jump into Bitcoin, jump into this. But if you really think about value through the cycle, I think that's how we think about things. And whether it's the Oxford Endowment, which is the long-term view, or the family office, we just have to get into that discipline of not getting excited when there are massive market dislocations and really staying focused.
So I guess on that topic of not getting excited, or the inverse of it, what are you excited about today? And how are you thinking about opportunities that you're prioritizing, again, whether in the family office or on the investment committee of Oxford?
Yeah. So I've hinted on that, and I think it's a good question, because I said there are three things I'm very focused on: China, technology, so outside of networks and consumerism, and then the energy transition. And look, just take China. China had a disastrous year last year. We're down 30%. We're still, licking wounds from that. But, fundamentally, I look at the Chinese economy and I think, okay, the world is broadly deglobalizing. This is a country that today is now the largest foreign lender, investor, and trading partner across the emerging world. It's bigger than Paris Club. It's bigger than the IMF. It's bigger than the World Bank. And then on top of that, it is the largest investor in Australia. It's the largest foreign investor in the United States. Do I think that they learned lessons after that 300-year malaise, after being number one in the 1700s to today? Yes, I do. And I think having spent a lot of time there and interacted with a number of their policymakers, I think they fundamentally have some very interesting systemic, strategic plans for investment in areas like technology and quantum computing, AI, et cetera, that I think will be very definitional of how we live in the future. So China, I don't think is going away. Technology, similarly. And then with the energy transition, I just mentioned, we're closing in on 9 billion people today. The UN thinks we're going to be 11 billion by 2100. That's a huge number of people. And I think that that we already know even today we're in deficit in terms of access to energy. And so I think, investing in innovation in this space, nuclear Gen 4, hydrogen, even carbon sequestration investments are things that I think are incredibly attractive and could generate not just an economic gain, but I think societally will really meaningfully append economic poverty and change the world in a material way.
I guess tying some themes that we talked a little bit about earlier, and it's hard not to think about inflation. And you brought it up a few minutes ago. I'm wondering, you've often had sort of unique and contrarian views on topics. I mean, everybody sees inflation. Any unique or contrarian views on it? And do you imagine that we're early, mid, late stages of this inflationary regime? Would love to hear your thoughts on that.
Yeah, so everybody wants to sound intelligent after the fact. I've been worried about inflation. I think I'm more of the Larry Summers, Mohammed Al-Arian camp, meaning I was very worried about inflation. I was worried it wasn't going to go away quickly. So the people who thought it was transitory, I was worried for a whole host of reasons. We'd pumped in a tremendous amount of money in terms of the stimulus, not just because of the pandemic, but we were still recovering from the 2008 financial crisis stimulus. So that's one. Number two, we had an aggregate demand shock. Most of us were sitting at home for much of 2020 into 2021. We now all came back with all this demand. That was another massive uptick on prices. And then number three, of course, is the issues around supply chains, and serving on corporate boards, seeing how supply chains have been disrupted obviously has a meaningful input in terms of how we think about inflation. So those things already were problematic. We now have a war, which is pushing prices up, meaningfully changing the demand supply dynamics. I do think the counter effects of how technology was going to reduce cost prices. So there's a wonderful chart, which I'm happy to share with people if they're interested. The AEI has put disaggregated prices over time. Actually, you see that there's in certain areas like healthcare and education, you see a material increase in prices. For a lot of other things, prices have come down because of technology, telecommunications, food production, transportation. And so there's a tug of war from where we are today, this enormous demand for stuff, energy, et cetera, food, and at the same time, can technology actually deliver some surprises? I'm net more worried than not. I think that there's concerns about wage pressures. We haven't even talked about logistics, raw materials, which I touched on. So I think on balance, I think the Fed has been slightly behind, and I think that even if they play catch up quite aggressively, the genie's kind of out of the bottle. And I think this year and certainly into next year, we'll be dealing with a lot of these shocks on inflation.
And so other than inflation, and it would be interesting to hear how you're handicapping that risk, again, in portfolios, but other than inflation, what other issues should be top of mind for investors today? What should we be focused on?
Yeah, so I do love not to be seen as a glass half empty person. It's very easy to say, here's a list of headwinds, and we've touched on some of them. Structural growth is trending downwards, inequality getting worse, and social mobility, real problems there, which have been revealed even to be worse in the pandemic. Demographic shifts, the world's population continues to grow. India's adding 1 million people a month to the population. That is a big deal. We're adding 60 million a year in places, in particular, in the emerging markets where there's very low growth. Add into that climate change, add into that enormous amounts of debt. I think the debt to GDP ratio globally is something like 240%. So real issues around where the world is going in these economic headwinds. But, on the other hand, I'm pretty optimistic that we've bailed ourselves out of problems before. If you go back to the 1700s, where we had predictions by many people, but other people saying, wait a minute, we're going to have too many people on the planet. We've managed through technology to upgrade, basically upgrade how we've been able to survive. So I think technology is a huge bet, and hopefully Malthus and all these Club of Rome and others will find out that once again we were maybe a bit more worried than necessary. I hope is where we land.
And so, and you mentioned just a minute ago about the inequality. Obviously there's unequal distribution of the pie around the world, and there's kind of a number of ways to think about inequality, and would love to hear your thoughts on what you mean by that. But broadly speaking, it doesn't seem to be getting any better. And a lot of the policies that we've witnessed seem to only be exacerbating it. Is there any hope for actually dealing with rising inequality other than just, redistributive kind of policies that are just going to higher taxes and more, et cetera, et cetera?
I think the bad news is we don't know how to solve inequality. And we have enough evidence now that we've tried left-leaning policies, tax and redistribution, that has not worked on a sustained long-term basis. At the same time, we've tried more supply side type of intervention. So keeping interest rates, taxes low, that has also not worked to reduce inequality. So the question is then, well, what do we do? And look, what has worked is investment, which goes back to your earlier question about short-termism, because we do need to invest in things that are longer term going to increase the pie, widen opportunities for people, and to continue to allow for progression. Just to give you a data point, social mobility in the United States, which is the backbone of what they call the American dream, and social mobility meaning the probability of being born in a low-income household and ending your life in a higher income household has gone down by about 50% in the last 30 years. So this is a real material sort of diminution or deterioration of really the backbone of how we structure societies, how we think about investing. The debt that society's taken on has been unproductive in many cases, and we have overpromised and underdelivered. And clearly, there has been a lot of inequity that we hadn't anticipated. So what do I think needs to happen? Really going back down to basics, thinking about investment. I mean, I think it's great that we now have some kind of an infrastructure plan in the United States, recognizing that infrastructure in the US is graded D+ by the, I think it's got maybe upgraded to C now by the American Civil Engineers Society. But that's just not good enough for a developed economy. You need broadband, you need infrastructure if you're going to have material improvements in people's lives.
And when you're thinking about, and you mentioned infrastructure, and I'm just thinking about the journey to get to that bill and what a fractured political system we have, but it also seems just more broadly like a more fractured society that we have. And it doesn't seem to be just the United States. It seems to be kind of economies and societies around the world, particularly in the Western world. What caused it? What are the ramifications? what could be done about that? How should we be thinking about the fracturing of our society today?
Well, look, I'm not a political scientist, and so my frame and my thinking is really more born out of the economics frame. And I think any society that is not seen to invest and to close the gap of inequality, or people to be feeling like they're improving their living standards, and in essence falls vulnerable, not just to uprisings and nationalism and sort of frustration by society as it continues to widen inequality, but I think also politically. And Przeworski, I've talked about this. I've written about his work. He showed that countries that are below $10,000 per capita, actually, you have no stability in the political arena. So I think that the fact that life expectancy in the United States is going down, we're seeing a material deterioration in access to education and healthcare. Infrastructure, as I said, is graded very poorly. These things all feed into people's living standards and their belief in the fact that if they worked hard, that they'll be able to participate in better living standards. And I think once you start to see people stop believing in these things is when you start to see the more political fissures that we've seen in nationalization, more protectionism, anti-immigrant sentiment. That to me comes hand in hand with a lack of obvious elements for progress.
Interesting. I wanted to turn maybe a little bit to slightly more micro, because we've been talking a little bit more macro. So let me start with the obvious. I mean, this is obviously the topic of your most recent book, but you sit on a bunch of boards. I mean, today we mentioned 3M, Chevron, Condé Nast, and that I believe you've, as I think you also mentioned, you've sat on the boards of Barclays, Barrick Gold, among others. What do you, for starters, what unique perspective do you find yourself bringing to the table? And what common issues do you see showing up with boards that you're interacted with, and how should investors thinking about those issues?
Well, I think common issues. So I think I actually wrote an article in Harvard Business Review not too long ago, really trying to separate what I would call tactical issues versus more structural issues. So what do I mean? There are always tactical issues. One of my board members, colleagues, who's in his 80s now, said to me, Dambisa, you're always going to be surprised. And I think that's kind of an interesting frame. Like, yeah, actually, whether it's a pandemic, a financial crisis, a war, economic collapse, demonstrations, we're always going to be surprised. So how do you run a business knowing that you're always going to be surprised? How do we run a family office knowing that we're always going to be surprised? And it goes back to what I said earlier, having great people who lean in, who are forward thinkers, who don't just bring you a pile of problems, but they themselves are sort of engaged in trying to make the institution better, really important. And then, as I said, the processes, making sure that in terms of your financial statements, in terms of your operations, in terms of safety, in terms of just how you block and tackle on a day-to-day basis, those things have to be deeply bedded. You can see I'm somebody who always ends up sitting on the audit committee of these boards, but that's how we think about things. Controls, compliance, legality, making sure that, even as we're surprised, it could be a pandemic, be a financial crisis, that you're still able to function through the organization. And then the more structural things, having a long-term view. And it's interesting because I don't think, by and large, I think companies struggle with being both of these things. So there are a lot of companies that are great with tactics and they survive and block and tackle, but then they lose sight of the broader overarching issues. And so that's why even in our conversation, I said, I talked about inflation, which is in the here and now. I've talked about the implications of higher food prices, higher oil prices because of the Russia's invasion into Ukraine. All those things are in the here and now. But I also wanted to emphasize China, the next 50 years, technology, the next 50 years, energy transition, the next 50 years. So basically being able to pedal between these two camps of thinking, I think is really important. And I think very often, for a whole host of reasons, organizations tilt into one or the other. And I think being able to kick the tires and force yourselves, hey, we're doing great in the short term. We've got a great balance sheet. We've been able to navigate the financial crisis, or the COVID crisis, but losing sight of where are we putting this marginal dollar to work over the next 20, 30, 50 years. I think that, basically putting tension on those perspectives is really important.
And you mentioned people and the importance of people. So you've worked with lots of CEOs. You've interacted with many of them. Have you been able to isolate any factors that you see native to exceptional performers or outperformers, or which factors you see consistently associated with underperformers? And maybe it's how they spend their time, where they spend their attention.
Yeah, so great question. One of my favorite books is a book called The Outsiders by William Thorndike. And he talks about, these handful of companies, I think there are 8 companies that have actually outperformed their peers and the markets over long periods of time. And he's basically, what is it about these companies? Is it that they are in the same sector? No, there was some finance, some media, engineering. Are the CEOs from the same background? No. In fact, there's one who's a woman, there's a number of men, but some of them are engineers, some of them have business backgrounds, etc. So he concludes actually that the successful companies over periods of time are companies where the CEO basically walks into the office every day and thinks about only one thing: what am I doing with this marginal dollar that I have? So in other words, they're very focused on capital allocation. I say capital, but I think in his writing, I think he's really talking about the allocation of resources. Am I going to use this dollar to pay down debt, to reinvest, to buy back stock? What if I'm reinvesting in the company? What am I reinvesting? Is it in the processes of the company, or am I reinvesting in people, or am I reinvesting in a new product line? Am I reinvesting in technology? Like, how do I think about this $1? And that's a very different perspective from companies. Very often companies are run by people who are focused on, a whole range of things. George Floyd, voting rights, abortion, climate change. And these are all critical things, but they actually are problematic because they take away the focus of being very, very structural and thinking very systematically about one thing only, which is allocating.
Yeah. You touched on the some of the ESG topics in there, and you also mentioned earlier, the focus on energy security and the climate agenda. How do you think the climate agenda will be impacted now? And you mentioned obviously that people need to eat, they need to keep themselves warm, they need to do whatever they got to do. But what does that really mean? And I guess if you could weave into that, this war, this ongoing war, could we afford for this war to keep going, and or is there an end game that sort of makes sense to you?
So I think in terms of climate, I can speak from the organizations I'm involved with. We're not letting up on climate. This for us is a real opportunity. Whoever finds out what is going to replace conventional energy or be synergistic with conventional energy is going to not only make an enormous economic fortune, but also is going to be societally, meaningfully changing the way the world operates. Those 1.5 billion people who've got no access to energy will now be able to have access to energy. That will really alter and tilt people's ability to access education and healthcare and to improve their livelihoods. So this is a massive prize. We're not going to let up on that because we've seen a blip in conventional oil prices. I think that would be crazy. But I do hope that this environment is going to bring some sanity to the conversation around climate. I think it became silly times in many respects. What do I mean by that? I think, number one, I hope that there'll be enough of a pause for people to realize, oh my goodness, the energy transition is a complex one. And it's not just about the energy aspects about the price. It's about living standards. It's about energy security. It's about the transition itself. The success of the transition really depends on getting this energy story right. It's about bringing people from different perspectives together. We need public policymakers at the table, but people who've got sense and understand we're consuming 100 million barrels, very difficult to replace. We need people from the civil society who are sensible and are trying to make a realistic effort, who recognize that 90% of the world's population lives in the poor emerging markets. We can't just turn the lights out without real second order consequences of disorderly migration. So we want that sense from NGOs, but we also need the private sector. I mean, the private sectors know how to put carbon, hydrogen, and oxygen together to create a kilojoule of energy. To basically say corporations are bad and should be defunded, to me is naive. And actually doesn't help solve the climate change problem. You want those people in the room because they have a frame for what could possibly work and what could be scalable. So I'm fundamentally optimistic that the crisis will yield an opportunity to come together and say, gosh, this is fundamentally a science problem, but it has real live consequences, urgent and large scale consequences for how we all live. There are geopolitical consequences in terms of immigration, in terms of living standards, in terms of conflict. We've got to get it right. But we were not focused on this problem in the way I think sensible people should have been. We should not be encouraging fishers or prejudicing the emerging markets who need economic growth. We need to figure out ways to be more sustainable. We need to acknowledge that everybody, corporations, civil society, public policy, we all want a low carbon future. And we definitely, because of the scale of the problem and the urgency of the problem, we definitely I do not believe, and maybe it's because I have a science background, we should not be cutting off potential solutions a priori. Why should we say nuclear is not an option? That's mad to me. Given the scale of the problem, let's look at nuclear Gen 4. It's been cleaned up a lot. Is that a possible solution? We cannot say carbon sequestration is bad. We should be open to everything and anything, given the scale and the immediacy of the problem, which the Secretary General of the UN calls Code Red. So right. That's what I would say on energy.
Yeah, no, thanks, Dambisa. You mentioned 2 times through the conversation that you referenced 1 or 2 of your mentors. When you're thinking about mentors or role models that you've had along the way, what do you think about as the most meaningful or useful advice you've ever received?
I think the fundamental point, it sounds a bit corny and kind of overused, but that anything is possible. I mean, I was born in Africa in 1969, and they didn't give birth certificates to Blacks. That rule only changed in 1973, 1974. And so to this day, I don't have a birth certificate. And the notion that in 53 years, I can go from being a girl child born in a landlocked small country in Africa with no birth certificate because of my race, to being able to speak to such an illustrious crowd today and talk about global issues is something that we shouldn't lose sight of. The world changes very quickly. And I think, unfortunately, the other thing which is kind of related to anything can happen is that too often the narratives are very negative. Everybody's thinking about how they're disadvantaged and how woe is me. And I'm not at all saying that there isn't prejudice or inequity in the world. But I do think that if you get caught up in that sort of frame of the world, then you'll never be part of really solutions and trying to lean in to make the world a better place. So I'm fundamentally optimistic, and that's how I've always been raised. And so hopefully that gives some indication for how I frame the world going forward, despite headwinds and economic challenges.
And if I were to ask you what advice you would have for other family offices or intergenerational families, what would come to mind?
Yeah, so I mean, I've told you the things that I think are important in terms of headwinds, but also where I think there's opportunities. I think it's just about traveling and really talking to other people. I think there are a lot of structural things. I mean, I touched on some of them that to me, maybe if you sit in your office in New York or London or wherever you may be, you may miss out on some of that thinking because you're not engaged in hearing alternative views. And I think fundamentally, people are very comfortable in their bubbles. We all live in, not all, but many people live in the West. They believe in democracy, as I do. They believe in market capitalism, as I do. But then they never stop to think how it is other models seem to work and function. and what the merits of those models are. Is there anything that we could learn from China? Why is it that some of the polling from Russia seems to suggest that Putin is so heavily supported? Like, people dismiss, oh, that's just propaganda, oh, it's just, misinformation. But I just think that understanding that there are competing models out there, and that we might not be the oracles of truth all the time, and maybe there's another interpretation of the things that we're seeing, I think will make us better investors.
Fantastic.
And indeed citizens.
Yeah, no, for sure. Human beings. Yeah. Just the last question, I know we're running up against time, and but you've done so many extraordinary things. I mean, talking about your life story and the contrast that you painted from, growing up Zambia. Was it called Rhodesia back then? Was it?
No, it was Zambia. It was Zambia from 1964. But okay. it was Rhodesia before that, Northern Rhodesia before.
Okay. So, but growing up in Zambia, and then traveling around the world, advising some of the largest corporations and some of the largest families and institutions, you've done some amazing thing. Like, what still sits on the bucket list? Like, what do you still hope to achieve in this world?
Oh my God, lots. I mean, I look at in the morning and I see Henry Kissinger's 98 and he's still delivering speeches. I'm like, oh my God, like I better get comfortable. So the world is changing so much in ways that has not happened in history in terms of technology. I try to lean in a lot into the technological space. I think that's very interesting. But obviously, China and what her impact, the Sino impact on the world is huge. It's going to be so definitional, I think. And I'd like to learn more and hear more about that. And so I'm super excited about where the world will be. I mean, what's going to happen with Bitcoin? What's going to happen with NFTs? Is art going to be a big liquid market with NFTs, etc.? So there's so many questions out there. I think it was Einstein who said the questions are the same, but the answers are different. And so let's see what happens.
Well, Dambisa, this was amazing. I can't thank you enough for joining us today, sharing your incredible insights and being so generous with your time and your wisdom. And greatly appreciate it. And I certainly hope to have you back again soon before you turn 98. It's
Me too. I'll try to avoid COVID. How's that?
That would be great.
Thank you, Mo. I really appreciate it.